Into the world of market equities and all things finance. I'm Andy Hodges and this is ATM Prime broadcasting to you from Harare, Zimbabwe. Now, our two stories on Beat the Market today. Well, the first segment, we're going to be looking at Zimbabwe Stock Exchange ZSE listed company British American Tobacco, or BAT, in its audited abridged financial results for the year ended 31 December 2022. It indicates that the group recorded a 50% increase in revenue amounting to around 24.3 billion Zimbabwe dollars. This was driven by price reviews and revenue generated from cut rag tobacco and leaf export sales. These two income streams generated a gross profit of around 18.3 billion Zimbabwe dollars, which represents a 74% growth when compared to the year prior. In our second segment, this is a segment I'd like you to watch. This is about the Zimbabwe Stock Exchange listed Econet Zimbabwe and its subsidiary Ecocash Holdings. They're seeking to extend a rights issue to their shareholders in a bid to raise 30 million United States dollars to redeem outstanding debentures. We'll explain exactly to you what debentures are. Now, through two separate cautionary statements, Ecocash and Econet advised of a pending extraordinary general meeting to decide on the possibility of this move. We speak to Nivtail Capital actuarial analyst and our regular Beat the Market contributor Marvin Chidzonga about these stories in detail after the break. Don't go away. Beat the Market. We'll be right back. Welcome back to Beat the Market. As I know and as you know, the only show in Zimbabwe that deep dives into the world of markets, equities, and all things finance. This is ATM Prime, and I'm Andy Hodges. Now, Zimbabwe Stock Exchange listed company British American Tobacco, or BAT, in its audited abridged financial results for the year ended 31 December. Had a 50% increase in revenue, amount to about 24.3 billion Zimbabwe dollars, driven by price reviews and revenue generated from cut rag tobacco and leaf export sales. Now, as you know, the company manufactures, distributes, and sells cigarettes through a network of independent retailers and distributors. The group has a cigarette manufacturing plant in Zimbabwe and sells cigarettes on the local market and exports cut rag tobacco. I'm joined by Beat the Market regular contributor and Nivtail Capital actuarial analyst Marvin Chidzonga to discuss the company's financials. Marvin, as usual, welcome to Beat the Market.
Thank you.
Happy Independence. Even though I'm a day late, I didn't see you yesterday, so happy Independence.
To all of us.
Now then, let's look at BAT. According to the group, profit before tax for the year finalized 9 billion Zimbabwe dollars, a 20% growth compared to the prior year. The revenue growth, though, it didn't seem to translate into similar profit before tax. And the reason for that, in looking at the financials, was what they termed exchange losses. So, of course, briefly, what are these exchange losses that BAT are talking about, and what really caused them?
Yeah, so we all know that what's been happening to our local currency, the Zim dollar, it's been depreciating a lot at a really maybe fast rate, but at one time I think we had stability for the local currency. So what that has done, not only to BAT but to a lot of companies, is that one, it has affected the balance sheet for these companies, and also for a lot of their obligations, they have been to be sort of translated not at a good rate for them. So the foreign currency that they've been getting, when they translate that maybe into Zim dollars, the rate at which they've been able to actually exchange those foreign currency earnings, it's not really been at the good rate because, well, the auction rate, to a certain extent, it doesn't reflect the true value, the exchange rate value of the US dollar.
It's back to this auction parallel market, mate,
exactly.
And the gap between it. I mean, as we always say here, that the word I must use is ridiculous. That's the only word I can use. We just need one rate and a true value of a Zimbabwe dollar.
That's very true. So as you would know, a lot of obligations versus maybe a lot of the so-called foreign currency that they'll be getting. Sometimes it doesn't really translate into the proper growth that they're actually experiencing. So which is why that growth is not really reflected in terms of.
But I'll tell you where there is growth, and that's tax to government. I mean, it went up 59% to 17.5 billion Zimbabwe dollars last year, obviously buoyed by strong growth in profits generated before tax. Because remember, this is the before tax taxation, as you know. In 2021, they contributed 11 billion, so that's quite a huge increase, 6.5 billion up. I mean, is this due to what is well known as the sin tax? Of course, sin tax is on alcohol and cigarettes, or is it really just an impact of inflationary pressures that we see?
It's a combination of the two. Okay, sin tax is obvious there in the sense that look, there's the demand for tobacco and other products like alcohol. It's got maybe an inelastic demand, so they know, look, at whatever price they're going to maybe sell their products, there'll always people will buy. So it's a sin tax to a certain effect. That is, they know that it's an easy way to collect revenue on behalf of the government. But secondly, also is the inflationary pressure. The Zim dollar obviously depreciating. When that happens, it might be assumed that look, there's been more revenue that has been collected by the government, but in actual fact, if you do a translation in US dollar terms, it could actually be lower. So it's an indicator of maybe the inflation, which is really being on the up.
Now, I mean, looking at again the results, this is directly from BAT Zimbabwe's results. They recorded just over 1 million sticks of cigarettes compared to 1,130,000 in 2021. That's negative volume performance. However, of course, they say that despite that, power shortages, reduced disposable income, it was only 6.7% down based on the previous year. Here's an interesting comment. They said the volume drop was driven by the shortage of RTGS, that's Zimbabwe dollars of course, in the market, which made it difficult for customers to purchase our products. Now, interesting here. Is this all about a tight monetary policy? As we know, the Reserve Bank of Zimbabwe is imposing a tight monetary policy to try and contain inflation. I mean, that seems to now be hitting business where it hurts. And another one that actually occurred to me as well is in terms of BAT's, in terms of smuggled cigarettes, because it doesn't seem that we have that problem as much as Zimbabwe, as much as South Africa does. So we know more Zimbabwe cigarettes being smuggled to South Africa, but still, there could be a lot of cigarettes on the shelves where people are not paying tax. Obviously, they're cheaper. But anyway, what is your take on this reduction in the sticks and how monetary policy is affecting companies like BAT?
Yeah, obviously, if you look, especially after the announcement of the bank lending rates, maybe to about 200%, that's in May last year, it sort of tightened the monetary situation in Zimbabwe, where not a lot of Zim dollars were on the market. So right from around May last year to even, I would say, end of last year, in terms of exposure for Zim dollars to be actually circulating in the market, it was reduced from a bank lending perspective. But not only that, if you remember, government even also placed a moratorium on payments to various government suppliers. So the circulation of the Zim dollar was sort of diminished in the market. Having said so, the disposable income also that would come from maybe as a spillover from such payments, it was also reduced. So to a certain extent, the tight monetary policy which was put in place by the central bank did play a part in actually reducing the Zim dollar.
So good for the economy, but some companies obviously will struggle, particularly those who are based in Zimbabwe, spending or getting income back in Zimbabwe dollars.
It's always the case with any policy pronouncement. It seeks maybe to solve one problem, but to a certain extent, it also maybe causes a damage to other aspects. But in the grand scheme of things, you would say, look,
it's worth it.
It was worth it. There will always be what do you call it?
Ripple effects.
Exactly. And
let me get numbers here. I mean, the board proposed, as BAT board, declaration of final dividend, 88.35 Zimbabwe dollars per share. Good return? Is that a good return? Is that something that can encourage investors? Do you think that's a decent return on their investment?
Well, you know what? It's more like they're put into a corner. So they can only improvise and work maybe what's best, with what they have, the tools that they have. I would really be inclined towards maybe other ways to preserve or to attract value for shareholders. One aspect that I would maybe cite is that of maybe scrip dividend, not just pure cash. Especially in light of the inflationary trends that we're seeing. So by the time you give your shareholders Zim dollar dividend, look, they would have lost out value. So you'd rather say, look, you lock in the funds. And obviously, we now need to think about the blended dividend, where you've got the Zim dollar dividend. Both definitely, they are not just getting their revenue in Zim dollars. So there needs to be a blend in terms of the ZW component as well as the
But
US
that's
dollar
something for the
component.
shareholders of BAT to sit down and make noise about. Yes,
Yes,
we always
but-
talk about shareholder activism, don't we, me and you?
Yes. But BAT also has got another issue. BAT, the parent company, the international company, has not been able to repatriate its dividends because of the foreign currency situation in the country. So how do they balance giving their shareholders who are based in Zim against the parent company? So they've been stockpiling. Maybe they are owed a lot of dividends that they're not able to.
Millions and millions.
Exactly. So I think it's also not just for a BAT management issue. It's also something that has to be addressed by our central bank, because it's difficult to say convince other foreign investors to come in, especially multinational companies, when others were already there. They have not really been.
This is one of the reasons, of course, the Victoria Falls Stock Exchange was set up to try and get around that exact currency problem.
Yes.
But I want to talk about tobacco in general, moving away slightly from BAT. You look at the number, Tobacco Industry Marketing Board, TIMB, country sold 220 million United States dollars worth of tobacco in 25 days, compared to 191 million same period last year. We exported 968 million United States dollars worth of tobacco. That's a 68% increase from 2021. That's the 2022 number, of course. Your view, how are we looking this season? You think that, okay, I think we'll beat 968 million. We'll probably beat the tonnage. Does it look like a good year for tobacco?
Well, look, it's just a case of look at the numbers, the trends, the patterns. If we take maybe even a grade 1 mathematician, I think, it's putting good projections for the year to say, look, already this way we are. We're just doing a differential analysis. We seem to have had good numbers, better numbers than last year. And obviously from that trend analysis, you would project that to get better numbers.
We've spoken about this before. I'm not sure that Zimbabwe is yet taking as seriously as we should the issue of the ban of smoking that's basically sweeping the world. Sure, China, they're still far away from banning smoking, but I have a feeling that a lot of countries already have or are considering it because, of course, it's huge health implications. And more importantly, of course, smoking puts a huge burden on the health sectors of various countries because you're paying for the lung cancer and the treatment of people who have side effects from smoking. And I don't know if we're taking this seriously. I know in the medium term, but I just think this anti-smoking lobby will be a threat for us about Zimbabwe tobacco. I'm not sure. I'm not talking about tomorrow, of course, but at some point.
At some point, it might not be in the short term or medium term, but in the long term, it definitely is something to be concerned about. So it's also important for our country to also maybe position ourselves for the next big cash crops. It might be not just be cash crops, but other crops. Because at the end of the day, if that ban really comes to effect, especially in our markets like China.
China.
But it might take a bit of some time because they've got it's just hard to get off cigarettes.
Yeah, we take it when 1.2 billion people, most of them actually smoke. It's half of them that need to say banned. I think they would have riots. Now it's time for us to take a breather. Now after the break, we look at one of the largest and biggest telecommunication companies in Zimbabwe. That, of course, is Econet Holdings, and examine their impending proposed rights issue and how it may affect their share price, or has it already? And, of course, what about the shareholding structure? Don't go away. Beat the market. We'll be right back.
Buckle up and prepare to be taken on a riveting journey, unlocking the very best of Zimbabwe. Architecture and interior design, art and entertainment, people, products, produce, the great outdoors, hidden gems, and so much more. Experience the good life from the comfort of your home. Only on C'est La Vie, Mondays at 6:30 p.m. on ZTN Prime, DSTV channel 294.
It's Wednesday, so welcome back to Beat the Market. As you know, the only show in Zimbabwe that deep dives into all things equities, markets, and finance. This is TM Prime broadcasting to you from Harare, Zimbabwe. Zimbabwe Stock Exchange listed ZSE, Econet Zimbabwe and its subsidiary Ecocash Holdings are seeking to extend a rights issue to their shareholders. Listen to that, to their shareholders, in a bid to raise $30 million United States dollars to redeem outstanding debentures. They're doing this through two separate cautionary statements. Ecocash and Econet advise of a pending extraordinary general meeting, or EGM, to decide on the possibility of this, because obviously they have to go to an EGM to get shareholder approval to actually issue the rights offer. Again, Marvin Chidzonga from Novtel Capital is still with me to discuss this in more detail. Okay, before we get into the whole rights issue and so forth, I think there's two specific questions. And just for our viewers out there, debentures are debt. Explain exactly what debentures are as briefly as you can. And also why Econet is making this particular rights issue to pay off this debt position.
Okay. No, put simply, I'll respond to your other question regarding the definition of a debenture. Put simply, a debenture is a financial instrument issued by any company out there with a view to raise capital on a medium to long-term basis. We are looking at maybe nothing less than a year's repayment. So with respect to the Econet one, it was a 6-year debenture. And it would be unsecured in most cases, which is the key difference between a debenture and a bond. So basically, a company gets into the market, it issues an instrument, more like a loan, then it gets that money to finance.
And the debentures backed by their own balance sheet or their credit.
Yeah, a credit witness. So it's more of a reputation game, which is why even not just governments or corporates get into the market. Yeah. So we haven't witnessed that in Zimbabwe for a long time because of our currency issues, but Econet, maybe because of its reputation, was able to successfully get something.
In fact, hold on to answering my question about why the rights issue. I think it will come up when I ask you a few more later on when we discuss it. But interesting. This, of course, is one of the key questions I needed to get your views on. Since Econet on the 6th of April declared their intention of going to the EGM for a rights issue, the share price of the company has declined. In fact, anywhere between over 25%. Now, that's unusual because if a company announces a right issue, investors look at it and they think it's a good idea or bad idea. But normally, if a share price declines after you issue an announcement of a rights issue, either there's something wrong, investors are seeing something wrong with the rights issue, or is it something that I can't see or we can't see back in the books of Econet or their cash flow, their growth prospects? Or what is your view about this decline in share price?
You know what? It can be ascribed. It can be ascribed to so many factors. The way we look at opportunities is different, and the way we look at risk is also different. If you maybe remember the greater food theory. So with any movement of any announcement, some are bound to see opportunity, some are bound to see risk. So I think maybe there are those who were quick maybe to sort of take maybe a flight to safety to say, look, before the share price actually plunge further than what it has done.
But these are institutional investors who are selling.
Well, look,
I think a lot of the individual or retail holders are holding on to Econet. Like, this looks like institutionals that have a problem issue.
We on Econet now, there are a lot of shareholders are now institutional. So you're looking at your pension funds. If you remember the last time when they issued this rights issue, that was back then in 2017, there was also a prize for, just after the announcement. Because why pension funds were looking at it, they were still looking at how were they able to follow up on their rights in US dollar.
That's the point, isn't it? Because number one, if the rights comes in, it's a US dollar rights issue, which means that whoever's holding shares would have to participate in US dollars. Yes. Okay. If you don't, we'll talk about the dilution of shareholding just now. You could get your shareholding diluted. All right. So rather, you cash up. Take your Zim dollars and run and put it somewhere else?
Quickly, before the share price comes down.
Before the share price crashes.
Yeah, so look, if you remember that the other time, that was 2017, the share price kept on going down. But so this could be maybe some panic moves from some institutional investors. So look, let's sell now because eventually the price is just going to go down. And even if it goes down, we're not going to be able to follow our rights in US dollars.
Well, I mean, that takes me to my other question. I'm going to throw some good questions at you just now. I just wanted to get a bit of the sort of the basis of this. Now, there's obviously existing shareholders in place. Is there an underwriter? It looks as if the Econet International, are they going to underwrite this? What are you hearing about who's going to underwrite? Because I don't believe 30 million will be all taken up by existing shareholders.
No, look, you know what? For various stakeholders would be interested to underwrite, anything to do with Econet, because looking at the company remains solid despite maybe the cash flow challenge that is experienced in terms of maybe extinguishing this obligation, the obligation that they have for, especially on the debenture, and the underlying reasons why also they had to put up the debenture. But obviously, speculation would be maybe from the last rights issue. It was Econet Global which undertook the underwriting capacity, and I would think there could be maybe some other stakeholders within the country, but the capacity to be able to underwrite 30 million. I think
it probably would be.
It would be a foreign institution.
Interesting, yeah.
It would
interesting to see what the EGM says. But one thing, okay, we keep saying this, of course, is that some shareholders will not take up their rights because, one, they may not have the money, two, they may not have the US dollars, so of course they won't take it up. But last time they tried this, they almost had a minority shareholder revolt. In fact, they did have a revolt, didn't they? I mean, I can see a similar situation going here, because how are minority shareholders' rights to be protected if they can't take up their rights? This is a debate we've always had, haven't we, about large shareholders against minorities and how minorities should be protected.
But you know what? In this case, it's a bit different from the last time. Because if you look at it this time, it's not really minority shareholders versus major shareholders, in the sense that, they are seeking to protect the company. That's the main goal. They are seeking to protect the balance sheet of the company, the reputation, the credit rating of the company. So in any way, if they're going
to default is a problem.
So if they default, the shareholders are actually worse off. The minority shareholders are worse off. So it's better for them to take a haircut, maybe by dilution, if they can't follow up their rights. But at least they'll salvage some reasonable value than a total maybe derating, or maybe for their company. So it's not really to say, look, it's a minority shareholder versus a majority shareholder. So. We both not legal gurus here. But this one, I think it's more of, let's protect the company, the credit rating, such that the company, when it does want to maybe to get back into the market, it will still carry a favorable credit rating.
Now, okay, let's get into these debentures. Now, obviously, when Econet did issue the debentures back in 2017, they issued the prospectus. I know you have a copy right there on your lap. There it is. Yep. And in there, I'm sure they said how they would redeem the debentures. They said how they would pay them back, because it's a debt instrument. So obviously, I would assume that it was either from cash flows, it was from profitability, it was from some form of revenue generation. They'd be paid it back. All of a sudden, we've shifted from, we're going to pay it back using our cash flow or recurrent income, to, we're going to raise capital from shareholders. That's a dramatic shift away from that perspective, I wager.
Well, you know what? We are in Zimbabwe. It's a very environment that we are operating in, for not just for companies, but even for other stakeholders. So at the time when they issued the debenture, or the whole rights issue, I think the expectation was that, look, they were going to be able to get their revenue from their operations, to be able to repay the debt from their revenue. But if you had observed for the past couple of years, their revenue has been largely in ZWL. So how are they going to be able to pay this, to extinguish this obligation in USD, when a lot of their revenue was coming in USD, in Zimbabwe dollars? So to a certain extent, I think, we can't blame management. These were issues beyond their control, and they could maybe violate the laws of the land by strictly selling maybe airtime or whatever in US dollars. So they had to find a way somehow to be able to extinguish this debt.
Now, here's a question, and I suppose in a call, I won't call it a conspiracy theory, but it could be seen that way. I mean, while we were doing our research today, me and my team, we spoke to a lot of people about this issue. And one of the things that kept coming up was the possibility, and I say possibility very strongly, that the majority shareholders are using this capital raising issue to repay debentures to increase their shareholding in Econet Holdings or EcoCash through the back door, because that's exactly what's going to happen. If the minorities don't take up their rights, if institutional investors don't take up their rights, but Econet Global does, well then the shareholding structure in Econet Holdings and EcoCash will substantially change. I mean, $30 million is no chump change.
Yeah, well, look, you know what? These are sort of some possible outcomes. Obviously, if Econet Global goes maybe to be the underwriter, but at the end of the day, we may ask ourselves, look, what options do they have to protect the company, to protect the value already which is there? So I think it just may be part of the collateral damage, you know. At the end of the day, someone has to come to the party and maybe and pick.
So you don't think that this is a backdoor way of shareholders?
It wasn't deliberate from the way we see it, but now, you know, for anyone who might maybe have some hard feelings, they may think, look, you know, that was the game. But I think, you know, their intentions were right in the first place. They really wanted to protect the company. But look, you know what, I think it's sort of maybe the major shareholder now who has to come and pick the tab. And if there's anything...
Because the argument is always that why you should have ventured in the first place. If you're going to go and raise capital, you should have just funded your debt through capital raising 6 years ago. Rather than actually wait 6 years and do it and pay all of those interest charges and then still go and raise capital from the same shoulder.
So they shouldn't have in the first place.
Basically,
yeah. So they would have just maybe you know, done a different transaction.
No, I'm running out of time, and you can see we can talk about this all day. But should shareholders, if they have the opportunity or they can, should they take up their rights or not? If the EGM says go ahead and issue.
You know what, there's still a lot of investment value in Econet. I would say, look, it's a recommendation that I would give to any shareholder, to any investor, to say, look, you know what, follow your rights.
Follow your rights.
Do
you believe you should follow your rights?
Yes.
My final question is interesting. Now, I'm sure you have heard by now, tomorrow, the 20th of April, well, it seems as if everything is going up when it comes to telecommunications. Rates are going up, SMS, data, voice. I mean, this is almost every month we're having these increases in these charges at telecoms companies. Very briefly, we've only got a minute left or so. That will have at least an impact on their bottom line. I mean, I'm not sure how long it will be for, but at least it will have a direct impact. Unfortunately, Zimbabweans will cry foul because they also think they're paying too much right now.
But look, you know what, we also have to be truthful to ourselves. To say, look, you know what, at what cost would it be for them to be able to be efficient? So we can now, you know, we can cry about maybe price increases, but look, we deserve the good service, and that service would come at a cost. So we all are aware that the Zim dollar has been depreciating.
That's the sad part, isn't it? It appears the US dollar prices will stay pretty stagnant. It's the Zim dollar price that's going to go up.
Exactly. So look, as long as our local currency is depreciating, you know, this is not the last time they are going to increase the...
No, in fact, I see this monthly, to be frank.
Exactly.
Anyway, well, that's it for today's episode of Beat the Market. Nivtail Capital Actual Analyst Marvin Chidzonga. As usual, thank you for appearing on Beat the Market. Of course, that's it for today. I will see you tomorrow morning, 6 a.m. You know the time, for the only show that you should wake up to, and that's Morning Rush here on ZTM Prime. I'm Andy Hodges. Goodbye, and please, you all be safe.